Crypto is running again. Bitcoin is up. Ethereum is up. All of these altcoins, they all keep getting pumped by individuals. But beneath all of this excitement, most Americans, they're still broke and they're still in debt and they're still hoping that a bull run will magically fix all of their financial problems. Today, I want to break down what's really going on in the crypto markets, including why the charts may be signaling the end of this bull run and why diversification is more important than ever. So I wanted to start with what the headlines are not telling you. We all know that crypto, it's been moving upward. There's a lot of hype and momentum. But if you look closely at the charts, something has definitely changed. We are no longer making those higher highs that a lot of people are used to. And now we are making lower highs. And we're starting to make lower lows as well. That pattern in itself, where you have lower highs and lower lows, those usually signal that there's a lot of fading momentum. The buyers, they're getting weaker, and the sellers, they're stepping in and they're getting stronger. So historically, we have to look at that is actually a big warning sign as to why the bull market is probably coming to an end. Now, this doesn't guarantee a crash. The crypto space, it can be very unpredictable. Anything can happen. But if you ignore this pattern, that can actually destroy your portfolio, and it has destroyed a lot of portfolios in the past. That's why it's very important for you to slow down as an investor and don't trade emotionally. Bull runs, they don't last forever. And most people, they don't realize that the party's over until they're down 20, 30, 40, or 50%. Now I'm going to give you guys a hard truth. Most Americans, they're not ready for a bull run or a crash or anything in between. Credit card debt right now, it is at record highs. Personal savings accounts, those are at historic lows. And 40% of Americans can't even cover a $1,000 emergency fund. Millions of people rely on buy now, pay later. And if that is your situation, then it doesn't matter if Bitcoin goes up, if it goes down, if it doubles, if it triples. The moment that life will hit you with an unexpected expense, you'll be forced to sell at the worst possible time. This is why most retail investors, they never get rich off of bull runs. And it's not because the opportunity isn't there. It's because they're not financially stable to be able to hold these investments throughout the long term. So I wanted to talk a little bit about what creates long-term wealth. It's not all this hype that you see on the social media. It's not all of these predictions that you see on Instagram and X and any other platforms. And it's all about diversification. That is going to be the key to be able to build a good foundation. You need cash. Now, most people, they always say that you need at least 6 months emergency fund. If you have watched my previous videos, I think that that's a good start. In reality, where you want to be, if you're able to, is try to get to that 18th month emergency fund. Why do I say that? Because we know that sometimes when you enter into very rough situations, especially as you get older, it's very difficult for you to be able to get another job or another place of employment or start a new business. You want to be able to have enough money in there to be able to feel secure going forward. 6 months is a good start, but I really do think that if you can get it up to 12 or 18 months, I think that's even better. And that'll make sure that you have a really good foundation when it comes to your living expenses so that you can focus on making your new business grow, or you can focus on being able to get good employment and not be desperate. Cash, it always will keep you calm, and it'll also keep you from panic selling. It gives you power during all of the volatility that you have in these other markets. Now, another pillar that I recommend that you have in your foundation is stocks. I know that stocks, they're very boring, but in the long term, they do win. Now, there are a lot of simple index funds that you can get. I've always been telling my clients in the past to try to see if they can get into these very low-cost index funds. Who sells them? You can go to websites like Vanguard or Fidelity or other brokerages and look for these low-cost index funds. They have a very, very small margin of cost, and you can invest in the S&P 500 or in other markets. And these usually end up growing very steady and they compound and they reward your patience as well. So that's my recommendation, something that has a very low load, but that you can invest money over time into these stocks or into these ETFs and just hold for the long term. All of these investments, they're basically a way to be able to invest in all of these productive companies for you to be able to have exposure in them. And all of these companies, a lot of them, they've existed for many decades. Now, pillar number 3, in my opinion, is to make sure that you have some form of real estate. Even if you are not buying today, you want to make sure that you learn your local market. You want to make sure that you study the rents, study the interest rates, and study all of the inventory. Real estate, in my opinion, it's a long-term wealth machine. This is something that over time, it will build equity. If you've looked at the past markets, a lot of people have built a lot of equity owning real estate. And also these properties, a lot of them have appreciated. And in many cases, you have the option of getting rental income from these rental properties. Now, this is something that you don't have to rush to get, but you should be preparing to be able to purchase real estate in the future if that is an option for you. And again, I don't recommend that if the government does eventually allow people to get 50-year mortgages, I don't recommend that you go that route. Try to stay between 15 to 30 years at the max. And if it's a possibility for you, it's always good to be able to pay down the principal faster every single month. If that's a possibility for you, to be able to save on that interest, because at the end of the day, the faster that you pay off this real estate, the better that you will sleep well at night. So I'm going to give you pillar number 4 here. And I think this is a very important one as well. And this is having your share of precious metals. Gold and silver, they're pretty much your insurance. They pretty much protect you. They hedge against inflation. You want to make sure that you hold gold and silver. And if you want to hold other precious metals as well, that's totally fine. As long as you do your due diligence, I highly recommend that you do have these metals. And this will also protect you against chaos in the future. When you buy precious metals, you're not really buying them to get rich. This is something that you buy to be able to keep you from losing everything. Because at the end of the day, these other markets that I'm telling you about, you got your fiat currency, you got your stocks, you got your real estate, all of this can be volatile. Cash eventually could become worthless. You have the markets which go up and down, so they're very volatile. Sometimes you're up, sometimes you're down. Over the long term, they have proven to go up. And real estate, as you know, the markets, those can also go up and down based on the current market conditions. And sometimes real estate, it can take decades to be able to recover. So that's why it's very important for you to be able to have precious metals as your insurance, because at the end of the day, you want to make sure that you're well diversified. Now, let me give you another pillar here. And this one is a little controversial, but I do recommend that if you have the means to be able to have a little bit of crypto, I really do think that that is actually a good pillar to be able to have in the diversification process. So as some of you may know, and if you've heard around, Bitcoin, the way they call it now, it's digital gold. And you have all the altcoins, which those are pretty much speculative assets. They have a high reward, but it's very speculative. So in my opinion, if you do decide to get into crypto, you have to treat it like a tool, not a lottery ticket. And I really do think that with crypto, you just have to continue accumulating and you can't let the emotions get the best of you. So in my own personal portfolio, I do hold some cryptocurrency, but I don't sell it. I accumulate it, which means that I'm not worried if the market has gone up or down. I just accumulate it over time. And so this is something that's very important for you not to put emotions into the crypto markets, because that's usually what ends up happening, where people, they will get emotionally drained. They will end up selling at the worst possible time. Now, one of the things that I do want to talk about too, and this is something that's been going on in the headlines, is this whole talk of stimulus checks. You have the talk of the government trying to send out more money to individual people. Depending on the government for financial stability, to me, I think that's a very dangerous precedent. Stimulus checks were emergency tools. They were not wealth building tools. Don't think that you can just get rich off of a stimulus. Yes, there are the off cases where maybe people got the stimulus check and maybe they decided to put it all on GameStop or AMC or some sort of altcoin that just rocketed to the moon. But that is a very rare case. If another stimulus check does come, don't blow it on all of this consumer junk. Use it to pay some high interest debt if you have any, or use it to build on your emergency fund, or use it to buy productive assets. A stimulus check, in my opinion, should not be spent on junk. Personally, if I do end up receiving a stimulus in the future, more than likely, that's going to go to gold and silver. That's just my own personal take. Yeah, I don't have any high interest debt that I have to worry about personally, but I do think that instead of spending it on a brand new television or on any other consumer junk, I personally are just going to put it into metals. So I'm going to tell you what you should be doing right now, especially as I really do think that this bull run, it looks like it's losing steam. I really do think that it's important for you to build your cash cushion and to pay down your debt. You want to be able to dollar cost average into these long-term assets, whether it be crypto or stocks. Diversify all of your holdings and study the real estate market and hold metals. Hold metals for protection. I think that's very important. And if crypto is really looking like it's forming those lower highs, also you want to make sure that you avoid emotional trading. I think that that is something that the newer investors, they don't tend to grasp. That's why it's very important, all of the things that I have mentioned in this video today, so that you can avoid emotional trading. And it will get easier over time as you become a seasoned investor or you become a seasoned stacker. You will find that it's easier for you to avoid the emotional trading that a lot of newer investors go through. And if crypto is really forming all of these lower highs and lower lows, this may be the time for you to be able to tighten your strategy and not loosen it. Remember that all of these bull runs, they do create millionaires, but only for the people who are very prepared. The ones who win, usually those are the ones that are the best diversified, they're disciplined, and they're emotionally steady as well. So the crypto markets, they might be losing the momentum, or it could surprise anyone. We could have Bitcoin go to 250,000 next year. It's very difficult to predict these markets, but either way, if you have a strong financial foundation that protects you in all of these scenarios and you stay well disciplined and well diversified, then you will be okay. So these are just little things that I wanted to go over with you guys today because not everything is doom and gloom. There's a lot of ways that you guys can protect yourselves over time. And it's just a matter of you being disciplined to cut out the fat. I know right now with social media and everything around you, it's very easy for you to spend, especially as we go into the holidays. It's very easy to be able to spend money on things that people sometimes they don't need. So that's why it's very important that if you do come around these holidays, that you spend your money wisely on things that do matter. And make sure that you spend time with your family as well, because at the end of the day, you only get them during a certain amount of time, and then once family's gone, then they're gone. So we're going to go ahead and leave the video here. Please comment down below. Let me know what you think. Let me know what you are doing to be able to prepare. I like reading your comments. And make sure that you subscribe to this channel. It's totally free. There's a lot of good videos out there, a lot of good content that I have created for you guys. And I will continue to provide you guys good content that I think will make you guys a better person. We'll see you guys in the next one. Take care.